Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. I'm Kismawati with NPM 234124041 from Accounting Study Program. In this video, I will explain about the history of the capital market in Indonesia, how this market developed from the colonial era to the modern system we know today. The history of the Indonesian capital market began in 1112 in Batavia, which is now known as Jakarta. At the time, the Dutch colonial government established the Batavia Stock Exchange. The purpose was to serve the investment needs of Dutch companies operating in the Dutch East Indies. However, stock exchange activities at that time were still very limited, as they only served certain groups and were not open to Indonesian society. After that, the exchange was closed and reopened several times, mainly due to global political and economic conditions such as World War I and World War II. After Indonesia gained independence, capital market activities were inactive for several decades. The government focused more on political stability and basic economic development. It was only in 1152 that the government began to show concern for the financial sector by establishing Bank Indonesia as the central bank. However, the capital market only became active again after the government issued the Foreign Investment Law, Law Number 1 of 1967, and the Domestic Investment Law, Law Number 6 of 1968, which encouraged investment and opened opportunities for the issuance of shares and bonds. A key milestone in the history of the modern capital market began on August 10, 1977, when the Jakarta Stock Exchange was officially reopened by President Suharto at the time. PT Semen Cibinong became the first company to go public by listing its share on the exchange. Although trading activities were still small at first, the government continued to make improvements. Several important policies were implemented, such as the deregulation program and the December 1987 package, which encouraged companies to enter the capital market and made it easier for investors. During this period, important institutions also emerged, such as BAPEPAM, or Capital Market Supervisory Agency, to regulate and oversee market activities. Entering the 2000s, technological development and globalization made the Indonesian capital market grow rapidly. In 2007, the Jakarta Stock Exchange, or GSX, and the Surabaya Stock Exchange, or SSX, officially merged to form the Indonesia Stock Exchange, or IDX. This merge aimed to improve efficiency, expand investor access, and strengthen Indonesia's position in the global market. Besides stocks, the IDX also trades other instruments such as bonds, mutual funds, ETFs, and derivatives. Today, the Indonesian capital market is more open, digital, and easily accessible, including for the public through online investment applications. The IDX is also active in investor education, one of which is the Young Nebeng Saham, or Let's Save in Stocks program launched in 2015 to increase public interest in investing. So it can be concluded the journey of Indonesian capital market has gone through a long process, From the colonial period to the current digital era, the capital market has now become one of the main pillars of the national economy, serving as a source of funding for companies and an investment medium for society. With technological advancement and growing public awareness, it is expected that the Indonesian capital market will continue to grow and be able to compete at the global level. So that's all for me. Thank you for watching. Wassalamualaikum warahmatullahi wabarakatuh.